Hey everybody, it's Ian Beamer with Guaranteed Rate. Hope everybody's doing well. Hope everybody's staying healthy. Baseball is underway. Sox are looking good. Cubs, uh, Cubs fans are, as always, eternally hopeful. There's room for improvement, but we'll hope for the best. Anyway, today I wanted to talk to you about the differences between FHA loans and conventional loans. For those of you out shopping for a new home, obviously, if you've checked in with your mortgage company, mortgage rates are on the rise. They're around 5% and climbing as I record this video, mid-April. So, um, just wanted to point out FHA is an option, especially for those of you that are looking to purchase a single-family home. Maybe you don't have perfect credit. Maybe you're putting down less than 20%. You may want to entertain an FHA loan. Just wanted to go over some numbers. A lot of times, listing agents are a little apprehensive about an FHA offer. There are some differences in the appraisal requirements between an FHA loan and a conventional loan. Conventional loans are ultimately loans that meet guidelines of Fannie Mae and Freddie Mac. If you've ever heard of those two entities, FHA loans um, are dictated by an entity called Ginnie Mae, and I didn't make up these names. I promise some of you that have had student loans may be familiar with Sally Mae. So Ginnie Mae is just the governing body for FHA and VA loans. But today we're going to talk about FHA. So um, minimum property requirements, there's not typically a separate inspection for most FHA purchases on a single family home, but the appraiser will have to sketch a floor plan of the layout of the home. He will have to peek his head or her head into the attic just to make sure that there's no evidence of water damage or mold or anything else that might be hazardous to the potential buyer. Um, GFI outlets near any sinks are a big one that typically we've got to get those swapped out, but not the end of the world. And then the other one, the major one that gets us caught up sometimes is just no bare wood or peeling paint. So if you do have some bare wood or peeling paint anywhere in the house, on some siding, maybe a windowsill, just you do have to scrape and paint and just cover that, protect that wood so it doesn't rot. So other than that, it's pretty straightforward. You can have an avocado green sink or toilet. From 1973, that's totally acceptable. You can have a microwave that might fire up and burn a silhouette of you into the wall behind you as you're cooking your popcorn. That's not the end. As long as it doesn't start a fire, FHA is not concerned. So cosmetic items, not an issue. Um, they will test utilities. All utilities have to be on in working order. But other than that, really FHA loans are great options. Nothing to be concerned about, nothing to steer away from. The value of the home is not calculated any differently by an FHA appraiser versus a conventional appraiser. They still look at the similar comps within typically 1 mile and within the past 12 months. So um, really very minimal differences on the appraisal. Um, Numbers wise, if you have less than perfect credit, and by less than perfect credit, for perfect credit on a conventional loan, typically we're referring to scores at or above 740. So 740 is considered perfect credit on a conventional loan. That's a Fannie Mae or Freddie Mac loan. FHA is a lot more lenient on credit scores, a lot more lenient on credit scores. So FHA will actually lend down to a 580 credit score with guaranteed rates, which is about 40 points lower than we can go on a conventional loan, which is capped at 620. But once you get down to a 620 credit score on a conventional loan, if you can even get approved, and that's a big if, rate wise, you're probably looking at something around 6%. and you're probably paying points to get that 6%. Um, on the other side of that coin, let's look at some numbers. FHA, let's take a 660 credit score. 660 credit score, let's stay 5% down. If you go with a conventional loan, say a $400,000 purchase price, your total monthly payment is going to be, including mortgage insurance, taxes and taxes and homeowners insurance. I'm just keeping the same on both. I use 758.67 on both. But assuming the same taxes and insurance, that payment is $3297.80 a month. That's $3297, almost $3,300 a month for a conventional loan with a 660 credit score, 5% down. If you did that same loan with an FHA loan, your payment is $308 less per month using FHA. Interest rate wise, again, I think I covered this. Conventional loan with a 660 credit score, you're still at 6%. 6% on a conventional loan as of today. FHA loan, 4.5%. 4.5%. Mortgage insurance is actually cheaper with an FHA loan. FHA loan with 5% down. Mortgage insurance is just 0.8% of the loan amount. That's annually. That's what you pay monthly. FHA does also have what they call mortgage insurance premium, which tacks on 1.75% of the loan amount to the loan balance at the time of closing. Typically, you can pay it out of pocket, but most people just tack it onto the loan amount. But even with that, your savings per month is $310 a month with FHA. So obviously, that's a huge savings. That's enormous. Let's say your credit's a little better than that. Let's say your credit's 720. On a conventional loan, unless you're going with some program where you've got to qualify based on income or you're buying in a certain area, your total monthly payment is $2305.21. This is on a this is not including taxes and insurance. This is just principal and interest and the mortgage insurance. So the principal and interest is $2131.51. And the mortgage insurance on a 720 borrower, 720 credit score with 3.5% down is 0.54% as of today. Mortgage insurance payment is $173.70. Principal and interest is $2131.51. Gives you a total monthly payment just between, not including taxes and insurance on this, $2305.21. The FHA loan, the interest rate with 3.5% down and a 720 credit score is 4.375 as of today. Mortgage insurance does bump up on FHA. If you put less than 5% down, it's 0.85% annually, plus the 1.75% mortgage insurance premium, which is tacked onto the loan amount. So I can walk you through that. But the savings on the FHA loan is $66.03 per month. That's $66.03 cheaper on an FHA loan. So I don't think FHA is something we need to shy away from. Mortgage insurance is set up a little bit differently on FHA. On a conventional loan, the mortgage insurance will be dropped automatically once you hit 78% of the original purchase price. FHA loans, the mortgage insurance is permanent, which that too scares some people. I understand that. However, you don't have to keep the FHA loan for 30 years. If you want to refinance in 3 years, 5 years, your credit gets a little better, you've got a little more equity, maybe interest rates improve a little bit, which hopefully they will from where we are now. You can always refinance out of the FHA loan and into a conventional loan, which, again, if you can show the equity, you may not have mortgage insurance at all. So I don't think that mortgage insurance part would scare me in that situation. So give me a call, let me know, leave a comment below, and love to hear your questions, love to discuss your situation, walk you through the pros and cons. Definitely FHA is something to entertain. Condominiums are totally different. Most condominiums are not FHA approved, so that makes it a lot tougher. Sometimes we can get the FHA approval on the condominium association, but we need the association to help us do that. And they have to dig up a lot of paperwork for us. So Some are willing to do it, some are not, most are not. So um, really, this is more for single family homes. But let me know what questions you have. Appreciate you checking out my video. Ian Beamer, guaranteed rate. Thank you so much. Have a great day. Go Cubs. Talk to you soon.